Let's touch base with another important market voice to get a better sense on how to play 2019 from an investment angle. Pashupati Advani joins us right here in our studios. Very good morning, Pashupati.
Happy New
Very
Year
happy New Year to you. And
Year.
just like us, you've also been dragged into the studios on the first day of 2019.
Well, at least we're one of the two countries in the world, I think, that are working today. So, I mean, where the markets are open.
Yeah, that was the joke in the morning that even
Yeah.
Bangladesh is shut.
Yeah, well, anyway, now that we're here, we have to participate, I guess, right?
Yeah.
So, you know, but it's
Over-enthusiastic.
Yeah, but I think it's going to be a kind of a dull year till we get some kind of direction as to what's happening with the elections. And I don't see that happening till about March. So I think, you know, we'll go up, we'll go down, we'll just float. There will obviously be stock-specific movement in certain industries as they benefit. But you know, given that there's going to be some policy making, but the bottom line is that, you know, you have to see which stocks are going to benefit from any kind of policy that's going to come in between now and February.
You don't think the US-China trade deal can fire up markets?
It could, but then I think we get shut out. I think if US and China sign a deal, then it's probably not as good for us as we would like. So, you know, I don't believe actually that they're going to sign a deal in a hurry. I think the pressure will now start from the Chinese side now, given that the US has got sort of one hand tied behind their back with a shutdown. I think that this is the time that the Chinese will probably strike. And they have been playing by lifting soybeans, but I think that's only a short term. I mean, it's a big short term, you know, game.
It's going to be an edgy start to 2019. But what about this sort of you know, decoupling that we've seen, at least in the last 6 months, from the US markets? We've been sort of unbattered, unmoved by what's happening across the globe. How long will that last? Because, you know, the worry is, what if suddenly, like was the case in 2017, or rather 2007 actually, what if we now begin to fall in line with the rest of the globe? Would that be a possibility? You
know, the thing about us that makes us slightly different is that we are very much dependent on the oil price. And this time, when all the trauma is going on worldwide, we have been benefited incredibly because oil has gone from $75 a barrel to under 50. So I think that has been a real selling point. So, you know, and even if you look at half the GST revenues are oil driven, you know, half our exports are imports are oil. So therefore, you know, this is very much a part of our life, and we don't realize it. We talk about, you know, the price of gold, but it's actually the price of oil that's going to drive our markets, according to me. And you know, we need to look and see that if oil remains at this level, which it looks like because of the sort of lowering of asset values in that sense, which are the companies that are going to benefit? And you know, we have to see those. And you know, obviously things like logistics and transportation, those are companies which will benefit because they've got lower input costs as a result of this. So they're the ones to look at, and I think that's where the opportunities are going to lie.
Interesting. What's your big bet for 2019?
Again, one has to be thematic. I think it's going to be a function of actually betting on trends. As I said, you know, if oil prices remain subdued, which they look like they are, and actually the other problem is that the Iran oil is kind of going off balance sheet because China is buying, I think, directly, and you know, that's taking care of one pocket. But I think that you know, when you look at things like that, whether it is the benefit, as I said, logistics benefit, in theory autos benefit because people will be able to buy autos. The cost of running a car is going to be, a car or a bike is going to be cheaper. So those are all things that one should look at, and those are the industries that are going to benefit. And then of course peripherals like ancillaries and services around them. You know, those are the kind of companies that we should be looking at.
Axis Bank has a new CEO who takes over today. We've already seen a run-up in the stock in anticipation of what his strategy would be like, but I think the second wave of move comes in from now. So is there an opportunity again in Axis and ICICI?
See, again, my experience of new CEOs is the first 3 to 6 months is house cleaning. So I think that, you know, you'll have a lot of the truth which has kind of still been slightly subdued will come out. It may actually wait till April because of the financial year. It depends on how much it is. If it's a small amount, we'll see it in March, between now and March. If it's a large amount, we'll see it in April. But I think people feel that the most of it is going to be over with Axis. And the other thing that's very interesting is that as money gets released in the system, it's going to come to banks like Axis. So if they're in a position with technology to be able to make sensible loans, and the new loans will work, I think that's one of the things to be looked at. I personally think that there's a lot more in the banking system than is come out yet, and even though there's a lot of optimism flowing, I'm not as optimistic as the general market in that space.
So would that make you also a little circumspect about corporate banks and the kind of recovery we've seen in the last 3 months, namely in ICICI Bank and Axis?
Yeah, I think so, because I think that we saw the crisis after ILFS hit, where they were all involved to some extent or the other, but how many other companies are there that are struggling? And the real challenge is that, with a lot of banks in PCA, our mid-cap companies are finding it difficult to get more working capital to grow. And unless we actually kickstart that whole thing and, open the floodgates, it's not going to happen. And the RBI is doing some opening, but it's not opening, they're not open the floodgates totally. They are letting water through, but they're not, So we're still on like a 10% water cut or a 20% water cut. We're not on full steam yet. And but the other thing is that we are seeing capex starting, so that's a good thing, because people who are running good businesses are actually spending on capex, and that's a great indicator of companies that feel they're doing well. So if you look at the capex spending, those are the companies to be looked at. They'll have a sort of dull 1 or 2 years while they put their new stuff together, but then after that they'll pick up and move to a new orbit.
What about autos?
Autos, the general trend worldwide is that autos are not going to buy, not going to move up. Our Maruti has been totally counter-cyclical to that, because they seem to be selling. We're also at the point where a lot of people are migrating from two-wheelers to four-wheelers. So again, it's a differentiator for us. And we have cars that start at, 2 lakh rupees and go up to, a couple of crores. Well, sort of 10 crores if you buy a Bugatti.
Yeah, that's true.
But most of the cars are between 2 and 7. I mean, that's where the markets are, and Maruti seems to be filling that gap really well and plugging away every 50,000 rupees. There's a new model, and its variants. So
But although there as well, there has been a bit of a slowdown. I mean, just looking at the last 3 months data and last December sales which have just come in, that's way off the mark.
But I think what's happened. This is the problem that has come from the NBFCs not having money to lend. And the people who are aspirational and buying autos want to buy it on EMIs. And if the NBFCs are having to cut back on their funding or be strict about who they're going to give loans to, then that's the effect. We had this before once. I can't remember exactly when there was almost like a zero auto lending, and then people just didn't buy cars. And whether it's for business or whether it's individuals, they just stopped buying them. Because I don't think too many people can go out and write a 10 lakh check, but they're quite happy to pay 20,000 rupees a month to buy a 10 lakh car.
Okay, Pashupati, great to have you in the studios as always, and once again a very happy new year.
And let's hope 19 is better than 18, but at the moment,
let's
India was not bad.
Sincerely
India was
hope
okay.
that.
Yeah. Thank you very much.